$100 billion in backing. Christine, what do we know about this project?
Well, Jumana, you and I were both here on ground in Riyadh last week for FII, and we know that the talk of the town was artificial intelligence, and that's where we really started to learn details about this massive new AI fund. So sources are telling us that Saudi Arabia is planning a project known as Project Transcendence. We are told that this is going to be a fund that will invest in AI infrastructure, AI startups, and also companies that are willing to commit their resources to the kingdom in order to help the country scale up in its AI ambitions. Now, we are told the ultimate goal is that this fund will ultimately have about $50 billion to $100 billion of investments. It is said that multiple government entities are going to be involved in this initiative, and the goal will ultimately be to bring in some of those bigger, more established tech companies that can bring their expertise to the kingdom. And really, all of this goes back to the Vision 2030 initiatives and to Saudi Arabia's AI strategy to be a top 15 nation in the AI space globally.
Yeah, I mean, they're also saying that this is a part and parcel of a project that will allow them to compete with the UAE, which obviously have huge AI ambitions as well. What does this mean for the AI race in the Middle East? Is there an AI race in the Middle East?
Well, both Saudi Arabia and the UAE have been racing to set up data centers and kind of position themselves as the dominant force in AI in the region. And honestly, so far, it had looked like Abu Dhabi was pulling ahead. Abu Dhabi has its G42 fund, which is a massive fund that has secured huge commitments from Microsoft. And also, we saw a deal struck back in September with Nvidia. Abu Dhabi also has a fund called MCX. So really, those two things taken together have put Abu Dhabi a little bit on the forefront in this jockeying for that front position in AI in the region. But Saudi Arabia has been catching up. Of course, we have this new fund that we could see announced at some point soon. And then last week out of FII, we also saw the PIF, that's Saudi Arabia's sovereign wealth fund. It announced a partnership with Google Cloud to develop a new AI hub in the eastern province of Dammam. Sources told us that that initiative or that new AI hub could see investments of as much as $10 billion. And then the PIF and Google Cloud said that that new AI hub is expected to add more than $71 billion to Saudi Arabia's GDP by 2030. So indeed, Saudi is catching up, and the race does seem to be on.
Yeah. Well, I'm going to put a question to you that I've been asking every single guest on the show this morning. How will a Trump presidency impact the AI efforts in the Middle East?
Well, of course, a great question, Jumana. Look, I think the big question for the UAE and Saudi Arabia is how quickly they can get their hands on the most cutting-edge advanced technology for semiconductors. The U.S. has been imposing export controls on the most advanced Nvidia chips, for example, just out of national security concerns. And it is expected, of course, because Trump carries that America First agenda, that Trump will probably carry on with export controls or perhaps even deepen them, which could create some challenges for countries like Saudi Arabia and the UAE, particularly as they try to advance their AI industries.
Nvidia, a leader in artificial intelligence chips, once more broke out on Wednesday at a proper purchase point of 140.76 and reached an all-time high on Thursday. But is it time for investors to purchase Nvidia stock? The price has recovered from last week's losses, when Nvidia ended the day 4.3% lower despite Microsoft and Meta platforms, two of the Magnificent Seven businesses, reporting good third-quarter profits. As a result, the stock surpassed Apple and took the top spot in market capitalization. The artificial intelligence, AI, driving growth of Nvidia has persisted in 2024. In order to train and implement AI models, the company's graphics processing units, GPUs, have been in high demand from cloud service providers, governments, and everyone else hoping to get on the AI bandwagon. This year, the semiconductor bellwether stock has increased 173%, with the company's upcoming fiscal 2025 third-quarter earnings expected to function as a trigger. A closer look at recent developments in the AI ecosystem will inform us that the stock's climb is likely to continue. On November 20, the chipmaker will announce its fiscal Q3 results for the 3 months that ended on October 27. Nvidia faces competition from Intel and advanced micro devices in the AI processor market. AMD lags far behind Nvidia in the market for AI graphics processing units, GPUs, according to the company's most recent data. AMD's data center division saw a 122% increase in revenue to $3.5 billion in Q3 2024. By contrast, Nvidia's data center revenue was $26.3 billion in the second quarter of fiscal 2025, which concluded in July. It's important to note that, in spite of its size, Nvidia's data center revenue increased by an astounding 154% year-over-year in the most recent quarter. Additionally, AMD sells central processing units, CPUs, and server GPUs, but it hasn't been able to make as much of an impact in the AI chip industry as Nvidia. Meanwhile, Intel is far further behind. At first, it anticipated selling $500 million worth of AI GPUs this year. However, Intel management noted during its most recent earnings conference call that the overall adoption of Gaudi has been slower than we had expected. Consequently, Intel will not be able to meet its revenue goal of $500 million this year, indicating that it will not be posing a significant threat to Nvidia. AMD, however, projects $5 billion in sales of AI GPUs by 2024. Those figures are significantly less than what AI GPUs are worth. Nvidia's sales in a single quarter demonstrate that the company is still the industry leader for AI chips. After all, Nvidia may end the current year with $84 billion in AI GPU revenue at the present revenue run rate. It is clear that Nvidia currently holds a more than 90% market share when you sum together the possible AI GPU revenue projections of AMD, Intel, and Nvidia. More significantly, even after 2 years, its rivals have failed to gain any traction in the market for AI chips. As a result, Nvidia is still in a great position to control the majority of AI GPU spending. According to AMD's projections, the data center AI accelerator industry is expected to generate $500 billion in revenue annually by 2028. Nvidia is well positioned to capitalize on this market thanks to its strong market dominance. The recent financial reports of major tech companies like Microsoft and Meta Platforms have also revealed a major theme. They will keep investing heavily in the development of AI infrastructure. For example, Meta Platforms has increased the lower end of its 2024 capital expenditure (CapEx) projection. Instead of spending between $37 billion and $40 billion this year, it now anticipates spending between $38 billion and $40 billion. The business has stated, meanwhile, that it anticipates a significant acceleration in infrastructure expense growth next year. Mark Zuckerberg, the CEO of Meta, notes that in order to fully benefit from this technology, the firm will need to invest more in its AI initiatives, Zuckerberg noted during the most recent earnings conference call. First of all, it's evident that there are several new chances to leverage AI advancements to speed up our core operation, which should yield a high return on investment in the next years. Thus, I believe we ought to make additional investments there. Additionally, Microsoft is heavily investing in AI infrastructure. Its capital expenditures for the first quarter of fiscal 2025 totaled $20 billion, a substantial increase above the $11.2 billion it spent during the same period the previous year. Notably, Microsoft invested $55.7 billion in capital expenditures in fiscal 2024. The company's fiscal 2025 Q1 expenditure suggests a notable uptick in this area. Indeed, according to Microsoft management, capital expenditures will increase on a sequential basis given our cloud and AI demand signals. All of this indicates that there will continue to be a high demand for AI hardware, which will support Nvidia's remarkable growth. Nvidia is expected to generate $32.9 billion in fiscal Q3 revenue when it delivers its quarterly report later this month, according to consensus estimates compiled by Yahoo Finance. It is anticipated that the company's earnings will quadruple to $0.74 per share on an annual basis. Analysts are anticipating better growth from the chipmaker, which reported $32.5 billion in revenue at the midpoint of its previous results in August. Nvidia's manufacturing partners' capacity expansion efforts and the sustained strength in demand for AI hardware suggest that it may surpass consensus projections, which would give this high-flying AI company a welcome boost. Investors have yet another good incentive to purchase Nvidia stock before it reveals its quarterly results on November 20th, since the company is currently trading at an alluring 35 times forward earnings, compared to the average of 45 for the U.S. technology sector. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
All right, well, sticking with the AI story, Nvidia's price target hiked to $190 from $165 over at Bank of America. You can see the stock is up about 2.5% right now. Bank of America's Vivek Arya saying a generational opportunity is still ahead for the company. Our very own Brian Sozzi spoke with the analyst behind the call. Here's what they had to say.
We are in front of a generational opportunity because it's not every day you go and get a chance to re-architect the plumbings, right, of the computing infrastructure. This is what we saw back in the late 80s when the internet started. There was a small movement in the Department of Defense, and then gradually it reached the commercial stage. And every year there were questions about, what are the returns on investment? But what we saw during that nearly 10 to 20 year phase was new business models get created. Amazon came out, Google came out, Meta came out, right? Microsoft changed its entire way of doing business.
It's fascinating to hear Vivek pointing to some of the things that other analysts point to as the bearish signals for AI moving forward, comparing it to that tech bubble that we saw heading into the early 2000s here, but pointing out kind of the flip side of the argument that all of these big tech companies that are the Magnificent Seven stars we talk about every day were created during that time period. So maybe it's less a case of a bubble that's going to get popped in another case, which could be that we're going to get new names in the space, and Nvidia is going to be the driver of those new names that need their chips.
Yeah, and what also I thought was so interesting, and he said this within this note and further elaborated on this with his conversation with Sozzi earlier this morning, was just how big of a driver these massive hyperscalers are in order for adoption. Obviously, Nvidia, a direct beneficiary, but then when you think about the dominance and dominant role that they play, but as you get more and more money allocated to this space, there's more room for other companies, to your point, to do well. So it's not just Nvidia that's going to shine within the space, but there's lots of reason to be optimistic about AI. He also mentioned the results that we got out from TSMC last week, which certainly helped change a bit of the narrative. We did see a sell-off earlier in the week on the heels of ASML's disappointing guidance. Also some worries about further restrictions or curbs from the Biden administration targeting Middle Eastern companies. But then when you took a look at TSMC's results and the massive amount of demand that they currently are seeing, what their expectations are for quarters to come, that certainly helped ease any of the fears that we had out there on the street. And Maddie, you and I talked to so many analysts and strategists, portfolio managers over the last several weeks that have remained extremely optimistic about Nvidia. And many are even say that there's no doubt that it's going to be the first company to reach that $4 trillion valuation. So we'll see whether or not the momentum continues.
Mizuho has strengthened its position in the AI and data center industry by adding Nvidia as a new top selection for November. Mizuho analysts maintained their outperform rating for Nvidia and set a $140 price objective. They draw attention to Nvidia's dominant position in data center AI training and inference processors, where the company is thought to control more than 95% of the market. According to Mizuho, the market for AI chips for data centers is expected to expand at a compound annual growth rate of 74%, with the potential to reach $400 billion by 2027. According to Mizuho, Nvidia's cutting-edge products and roadmap, which include the H200, GB200, and GB300 chips that will scale up in 2024 and 2025, will drive this increase. Additionally, they anticipate that the NVL36/72 servers and Nvidia's Grace CPU will propel the expansion of content on AI servers. With an estimated 75% market share in PC gaming GPUs, Mizuho observes that Nvidia's gaming segment is still strong outside of data centers. We think China's limits on AI chips will continue to be a minor obstacle, the company continues. While RTX 40 series penetration in the PC market is still at about 10%, we also see an upgrade cycle potential for the RTX 50 series, as NVDA may see a gaming revenue run rate of more than $10 billion annually. Additionally, Mizuho highlights Nvidia's edge over its primary rivals, AMD and Intel. Mizuho anticipates that Nvidia will continue to dominate the market thanks to the performance enhancements offered by its Blackwell architecture and cost-effective increases in average selling prices, even as AMD is increasing production of its MI300 and Intel is developing its Gaudi 3. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
I think Nvidia is undervalued.
What?
Undervalued.
On what basis?
Because the future is much bigger. Nvidia is just one example.
Right.
Okay? What about the total, Gen AI future? What is the value of the future? Is this a bubble today or not? Okay? Some critics, the most negative guy says, oh, this AGI, ASI, in 10 years, maybe only 5% is actually useful or, replacing people's job, but 95% still the same, no change. It takes time. So I say, okay, let's accept the most negative critics' view. That is only 5% change, 95% unchanged, but what is that, ASI investment required to take? Okay, 10,000 smarter than mankind. How many gigawatts? We were talking about gigawatts just before me.
Yeah.
I have predicted it will take 400 gigawatts of AI data centers power. 400 gigawatts. That's bigger than total US electricity. And it will require 200 million chip. Okay? The cumulative capex, $9 trillion. $9 trillion. How do you recoup? How do you recoup? It's too much investment for many people's view. I say it's still very reasonable capex. $9 trillion is not too big. Maybe too small.
You like to think big.
Yeah. So let me say, what is $9 trillion cumulative? But if the 5% of GDP in 10 years from today replaced by ASI, what is the number?
Right.
5% of global GDP is $9 trillion. $9 trillion per year. If the ASI produce you $9 trillion per year, cumulative investment of $9 trillion, small money.
All right.
Small money. You recoup in 1 year for the total cumulative. So that means $9 trillion capex investment you can depreciate. 1 year revenue, that means like 50% profit. 50% profit. It is going to be $4 trillion net income per year. $4 trillion net income shared by new GAFA. 4 companies will take $1 trillion profit.
And you want to be one of them?
Of course.
The victory of Donald Trump has caused the stock markets to soar. Earlier this week, Jim Cramer, who has long thought that Trump's administration would be good for the stock market, talked about how the market responded when it seemed that Kamala Harris's odds of winning were increasing. In retrospect, Cramer's research provides a useful summary of the stock categories that may see growth in the upcoming weeks and months. Jim Cramer, who discussed the decline in Nvidia Corp shares last month, made fun of those who were doubting the stock by claiming that when the stock declines, Nvidia bears usually tend to write obituaries. When Nvidia releases its most recent quarterly results next month, investors will be closely following the firm. Nvidia is expected to increase significantly as a result of the AI wave and the data center boom. Jensen Huang, the CEO of Nvidia, projected that the company would spend over $250 billion a year on data center infrastructure at its GPU Technology Conference in March 2024. Depending on how long this level of investment lasts, this may amount to anywhere from $1 trillion to $2 trillion over the following 10 years. Vivek Arya of Bank of America confirmed this estimate during the same Q&A session, estimating that the entire addressable market would be between $1 and $2 trillion, especially when nations make investments in their own AI infrastructure. Spending may reach the upper end of that range by the end of the decade. Naturally, Nvidia won't control the full $2 trillion opportunity because it will have to contend with rivals like AMD as well as in-house AI accelerators from Google, Amazon, and even Apple. According to some analysts, Nvidia will hold a dominant position in the data center industry with a market share of over $950 billion between 2025 and 2029, which is less than half of the entire market. Nvidia's losses following the Q2 earnings were mostly anticipated given management-confirmed Blackwell delay reports. However, a modification to the Blackwell GPU mask was the primary cause of the delays. Analysts claim that this has little bearing on the chip's primary functional logic or architecture. Nvidia's basic growth premise remains unchanged despite Blackwell's several-month delay. We cut Nvidia and Microsoft Corporation during that time due to their company's outstanding returns over the past 2 years, especially Nvidia, and the weights they gained in the portfolio. Our opinions about AI and these two businesses' leadership have not altered, as we have stated. Nvidia and Microsoft continue to hold the top 2 spots in the portfolio on an absolute basis. At the time of writing, Nvidia holds the largest position and Microsoft comes in second. Both companies continue to be materially overweights in comparison to the benchmark. On November 20, one of the final significant tech earnings announcements of the year will be made by Nvidia, a chipmaker and market leader in computer processors and graphics. Due in large part to its crucial position in supplying power for AI and data processing requirements, the stock has increased by more than 200% in the last year and is still a Wall Street favorite. Notably, renowned industry analyst Toshiya Hari of Goldman Sachs is still bullish about Nvidia, stating that the business is well positioned to continue its outperformance at a P/E ratio below its historical norm. If supply stays stable and Blackwell GPUs are produced at full capacity this quarter, analyst Hari projects that Nvidia's income from developing business segments will reach about $1 billion for the October quarter, fiscal Q4. Despite supply limits, there is still a high demand for cloud services from customers like Alphabet, Microsoft, and Amazon. For instance, Microsoft anticipates that when more capacity becomes available, Azure revenue will rise in the second half of fiscal FY25 following COVID. Competitor Advanced Micro Devices recently increased its prediction for the AI accelerator industry to $500 billion by 2028, bolstered by a favorable prognosis for the market's expansion. Hari sees a short-term cyclical correction as unlikely, but acknowledging the possible hazards of a slower orders, Nvidia is anticipated to keep growing across a range of AI use cases. High adoption rate, which could affect infrastructure spending throughout the upcoming quarter.